It's time to define a marketing term. Commodity broker, analyst, and author of Mastering the Grain Markets, Elaine Kub, joins us. She believes the key to profitable grain trading is building knowledge about the fundamental practices of the industry. Today, she's here to help us define and understand cash grain contracts. Elaine, let's start with the basics.
Well, the basics of a cash grain contract that make it more interesting or more complex, let's say, than just a futures contract where you're just buying 5,000 bushels of grain. A cash grain contract can really dive into all of the specifics of a particular sample of grain. So this truckload of grain has, a certain amount of moisture in that grain, or the wheat has a certain amount of protein in it, or it may have damage issues. It may have, more foreign material in it than another sample. So that becomes more complex because you're not talking about a standard substance, you're talking about a specific thing, and that opens up a lot of trading opportunities for you.
So you need, as a producer or a seller of these products, to know what the elevator wants when you're negotiating a price?
Yeah, absolutely. And that's one of the reasons why I included it in the book, is just because obviously if you're already trading the cash grains, if you're a farmer, you know what's on the contracts that you're trading. But to think of it like the grain merchandisers think of it, or perhaps someone was going to read this book thinking about going into the industry or not familiar with what the industry is doing. So how do they think about it? How do they think about the arbitrage opportunities that are available of buying dry grain? How is that worth more to me than drying wet grain, for instance? So that was one of the reasons why I included it, but also because speculators that are thinking about, just these broad market movements, just your futures contract or futures charts, they also need to be thinking about what the industry is doing and how broad quality concerns can have an effect on a futures price. Like, for instance, this year, there was the aflatoxin situation through a lot of the Eastern Corn Belt, and you wouldn't necessarily think that that's affecting futures prices. And I wouldn't say that we've necessarily seen it do that yet. But for instance, when you hear stories of Europe canceling some shipments from the US, that doesn't necessarily mean that that's bearish because that's something about the broader market. That might just be a very specific quality concern for that specific barge load of grain. So thinking about these little subtle things that are going on in cash grain contracts can have an effect on your futures trading also.
How do you suppose discounts and premiums can be arbitraged to the advantage of your client?
Well, I'll tell you a story from when I was a cash grain merchandiser. At our elevator, we felt obliged one harvest. It was a very wet fall, very wet harvest, and we felt obliged to take a lot of grain from our clients, from our farmer clients that wanted to, just get through harvest and get rid of this wet grain. So we took it wet and we had a giant pile of it, and it all just turned black. It got heat damaged. We were holding on to a giant pile of bad corn, and there was no secret to it, right? It's sitting there right by the highway. Everybody in the county knew that this elevator had a bunch of bad grain. So the opportunities that opened up to the people who were trading with us is that any ethanol plants or anybody that we were selling to, they knew that we were trying to unload a bunch of grain, and they would be watching for it. So they could in effect penalize us in their basis bids to us. Farmers that were bringing in dry grain knew that we very badly needed good dry grain, so they could effectively demand a premium from us for it. So all of these things, if you know this about your counterparties, the people that you're trading with, the things that they need to blend in, to mix and blend into their cash grain contracts, that can be an advantage when you're trading and negotiating an arbitrage trade.
Okay, and finally, for today, what are the financial risks of handling grain?
This is, again, a matter of the quality. When you think about a cash grain contract that can represent a certain specific sample of grain and the quality that it has and the problems that it has with it, when you're handling the grain, you really have to be aware of how shrink happens, for instance. If it's wet grain, you're going to find that the volume of it shrinks down more, so that will affect the total number of bushels in your elevator. You have to be aware of heat damage, other damage, any sort of aflatoxins, toxins that can grow within the grain while you're handling it. So there are a lot of risks for just hanging on to a physical quantity of grain that will be reflected in the cash grain context that you're trading that, don't necessarily come into play if you're just playing with a futures contract that's just a standard 5,000 bushels of grain.
Elaine Kub, broker, analyst, and author of Mastering the Grain Markets.